Good evening, everyone. Thank you for joining us. I'm Katheryn DeClerck of the Making the Right Move team, and along with me is my teammate, Martha Randazzo. We're really excited to have you here tonight to talk about the mortgage process and understanding the steps. This is part of our series, our monthly series, Keepin It Real with Katheryn and Martha. And tonight we have a special guest. Actually, he was with us once before, so I'm really excited to once again introduce our friend, our colleague, Kris Diaz. He's a senior loan officer for Hudson United Mortgage. So good evening, Kris. Thanks for being here tonight.
Good evening. Thanks for having me.
Oh, we always love it when you're here because you answer some great questions for us and tell us an awful lot about the process from the mortgage standpoint. Let me tell you, though, about the next two sessions that we're going to be having. Our May session is Staging for Success and Top Dollar. And that's on May 16th from 7 to 7:30. And in June, it's going to be For Sale by Owner, Should You? And I think you might know what my answer might be, but we're going to go over what the pitfalls might be of being a for sale by owner. And that's June 13th from 7 to 7:30. So tonight we're going to let Kris take it away. We've had a lot of requests for information about mortgages. Kris was here with our first time home buyer evening that we had, but we wanted to be, that was a little bit of a high level. So tonight we're going to dig into it a little bit deeper and talk about what you need to know, what he's going to go through to pre-approve you. So I'm going to turn it over to him and we're going to have some questions at the end. So Kris, tell us about the pre-approval process.
Sure. So that's the first step, is you're going to want to get pre-approved. When we do a pre-approval, tells us a little bit, well, the bank is going to determine the borrower's ability to repay, as well as their willingness to repay. The ability to repay, and excuse me for one moment.
Those allergies, right?
I'm sorry.
It changed, and oh my God, allergies.
I know. Allergies are killing all of us.
Yeah. Yes, I apologize.
No worries.
So it's going to borrower's ability to repay is calculated by debt to income ratio. Simply stated, it is the proposed total monthly payment divided by the total monthly income of the borrower. And then finally, we have willingness to repay. That's going to be determined by the person's credit. When the bank is going to look at the FICO score and the loan of value of the property they're looking to buy.
And by loan to value, you mean the amount of loan to the total amount of the house. So like if they're putting 20% down, they're financing 80%. So that would be like 80% loan to value, right?
Yep. So the minimum loan down payment for a first-time home buyer is 3%. That's for your conventional loans. For FHA, it's going to be 3.5%. If they've had a home within the last 3 years, then it's going to be 5%. It's going to be the minimum down payment.
What about the credit score? Does it, like, what's the lowest credit score anybody
Sure. Well,
can get a
for
loan?
conventional, it's going to be 620 or better. FHA, it's going to be 580. But quite frankly, the better your credit, the better interest rate you're going to have.
Okay.
Yep. So there's a big difference between a pre-approval and a pre-qualification as well. So a lot of banks right now will do what's called a pre-qualification. They're not really verifying too much information. They're just going to ask some basic questions, and they're not really going to run credit. But a true pre-approval is going to give you a better idea of the house you can afford. So during a pre-approval, we're going to verify the credit, income, and assets of the borrower. So when it comes to income, and I'm so sorry, excuse me.
So I'm wondering if people are just doing or getting pre-qualification letters over pre-approvals because are they just quicker to get? The bank doesn't have to do a lot of work, but they're not really valid, they're not thorough?
Yeah, well, what it really comes down to is the bank doesn't want to spend the money to run somebody's credit. There is a cost involved, as well as kind of doing a basic underwrite. They have to pay an underwriter, obviously, to do the work, and they rather wait till they have a loan commitment. I'm sorry, accepted offer for the borrower. But like I said, we're going to verify income. So typically, if you're self-employed, we're going to ask for 2 years business, 2 years personal tax returns. If you're a W-2 employee, we're going to ask for recent pay stub and your last W-2s for the last 2 years. In terms of credit, there's good reasons why we're going to run credit. It's more than just looking for the FICO score. We're going to import the liabilities, and from there we can calculate the debt to income ratio for the borrower. And then finally is assets. Banks can ask for 2 months worth of bank statements. Make sure that the borrower has enough funds for the down payment and closing costs. Here in New York, typically closing costs are pretty high. Rough rule of thumb, I say it's between 4 and 6% of the loan amount. Typically, I like to say be prepared to have 5% down, 5% available for the closing costs. And
Yeah, and
like I
that's
said,
usually
down
what we
payment's
tell
gonna
them.
be 3 to 5%.
Yeah, we try to prepare people as well, because sometimes they have a certain amount of money and they're thinking, oh, that's what we need for the down payment, but they also need money for closing costs. So we also try to make sure, especially when we get a pre-approval from another lender, or they're telling us what they have, that we ask that question, because not every pre-approval that we get is really a pre-approval. And many times they're pre-qualifications, and it matters. There's a difference, right?
Yep, definitely. When I'm able to call a listing agent, tell them I fully vetted the borrower, we verified their income, their assets, their credit, they're really good to go. And then from there, I'll do a preliminary underwrite, and I'll run it through our automated underwriting system. So if any has desktop underwriter DU, Freddie has LP, and we're looking to get an approved eligible. So that tells us that Fannie and Freddie are willing to buy the loan, and it's good to go. It's a pretty solid pre-approval from there.
If we get one of these pre-approvals from you, we're pretty much, as a buyer's agent, we know it's good to go. And we can
Yeah, definitely.
be comfortable presenting it to the seller's agents because it's been verified.
Yep. So, that's why a pre-approval holds a lot more weight than a pre-qualification. During a pre-qualification at a bank might just ask them, hey, what's your income? Do you have an idea of what your monthly debts are? And a lot of people really don't know what their monthly payments are, their monthly debt. So this we can source directly from the credit report.
Great.
And being able to calculate the debt to income is very important, because it's going to tell us which loan program they're going to qualify for. And it'll tell the bank, honestly, how will help to determine their ability to repay the loan.
Right. And when we talk about the income, and I know you say there's several sources of income, what might some of those be? Sure.
Well, if you have someone who's retired, they might have a pension income, they might have Social Security. In those cases, we'll typically ask for an awards letter. So like Social Security Administration will send out a letter, typically November, October, letting the borrower know what their monthly award will be going in the future for the following year. Same thing with pension. And if they're self-employed, or even if they're not self-employed, let's say they have rental income from rental properties. If that's the case, then we're typically going to look for tax returns, or maybe even a copy of the leases that they have for that income. But if you're your typical W-2 employee, I will say we need 2 years worth of 2 years worth of work history.
Okay.
They don't have to be at the same job for 2 years.
Okay.
But we're gonna need 2 years history.
What if someone changes jobs in the middle of this process and it's like still in the same field? Is that
Yeah.
okay? Is that a problem?
That actually can be very much a problem. You know, that's typically, so once they're pre-approved, you know, we'll give them a little guidance of certain things that you shouldn't do. For example, you should try to avoid large purchases, you know, taking on a lot of new debt, changing jobs.
Vacation, Kris?
I'm sorry?
I can't go on vacation?
You can go on vacation as long as you don't rack up the debt.
So I
Doing
can't
so-
go to Europe, but I can go to Florida. Is that what you're saying?
Yep,
I don't
if
know.
you have the funds for it, by all means, go on vacation.
I think Disney's is as expensive as Europe, so
I don't think.
know where you're
think
going.
it is.
Yeah. So, yeah, and then, you know, there's various sources of income. So depending on your situation, that's when we're gonna ask for the proof of income, right? So it could be 2 years tax returns, or it could be 2 years just W-2s and a recent pay stub. Those who are earning commission, or those who want to use overtime to be calculated into their income, we're going to take a 2-year average of that. So, you know, if you're a car salesman or any position where you're earning a commission, we're going to want to see a 2-year history of it, and we're going to take an average of that. Also important, I forgot to mention, is if you're self-employed, you have to be self-employed for at least 2 years. And they're going to take an average, again, of that income off of the tax returns. If you're
It's
in
probably
business,
not the
I'm sorry?
time to, like, it's probably not the time to quit your job and decide to be a consultant and a 1099 consultant.
Correct. Yeah, you have to have that 2-year work history to calculate the income. Same thing with commissions, same thing with overtime. You know, you could show a recent pay stub and you say, look how much overtime I earned. Or even just last year, you might have had a lot of overtime, but they're going to take the underwriter at the bank is going to take a 2-year average of that.
Okay.
For those who are self-employed, if you're in business over 5 years, then Freddie will allow you just to use your most recent tax return, and they won't take a 2-year average. So that's important if you had a really good year last year, but the prior year, maybe you were still feeling the effects of the pandemic and your business didn't show that much income. If you've been in business for 5 years or longer, Freddie only needs 1 year. Okay. So those are income, assets. This is a really tricky subject. Bank is going to ask for 2 months worth of bank statements. They want to basically see that the funds have been there. They're going to look to source the funds that are in the bank account, and that's where the seasoning period is as well. Seasoning meaning the funds have been there for at least 2 months.
So Katheryn can't give me a loan of 10,000. A couple of weeks ago, I put it in, doesn't work.
Correct. No large deposits. Typically what I would say is, you know, if you're paid bi-weekly, you shouldn't have a deposit greater than 50% of what your monthly income is. So now it is possible to get gifts from a close relative, you know, a parent, a sibling, even a child. You can get a gift. Some employers do give gifts as well. So you can definitely get a gift as part of your assets.
Kris, I have a question about that. Let's say someone decides to take some money out of their 401k and they move it into their checking account, for example. They would just have to show where it came from, right?
Yes. Okay. And then when you're receiving a gift, ideally it should be the form of a check or a wire going into your bank account. So you have to obviously show your bank statement where the money is going in, as well as the bank statement of the person who gave you the gift, so they can see the money going out of that. Typically, we're also going to need a gift letter from the person who gave the gift saying it is a gift, it's not a loan. They don't expect to be repaid. So, it gets a little tricky. You have folks who come and take a huge amount. Maybe they had money that wasn't in a bank account and they make a large deposit. Those funds automatically get disqualified. They're no longer eligible to be used.
So the best thing it sounds like they should do before they move anything is talk to you. Talk to the loan officer
Sure.
before you start making those kinds of movements.
Definitely.
Because it can mess up the transaction. So
Definitely. And then finally, we're going to verify credit. And like I said, credit is more than just your FICO score. So many times I hear, I know what my FICO score is. I have Credit Karma. You don't have to run my credit. But actually, we do have to run the credit for a true pre-approval. Like I said, first of all, Credit Karma isn't very accurate, right? A lot of times I've seen Credit Karma just be way off. But more than that, we don't want just the FICO score. We want to be able to report all your monthly liabilities. From there, one of the big things that come up with that is student loans. So a lot of folks might have student loans that might be deferred, especially now during the pandemic, they were deferred. Typically what we do those still have to be counted as debt. So what we typically do is take 0.5% of the outstanding loan balance, and we say that's what your monthly payment is going to be going forward into the future. So although you don't have monthly payments now, ideally, in reality, you're eventually going to have monthly payments. So that has to be calculated in. So that's a big one. Folks really, they don't count student loans because they haven't made payments in a few years on this, or weren't required to make payments in a few years for student loans.
right.
And quite frankly, we're going to need the credit anyway, the credit report. When we pull the credit report, it's good for at least 3 months. We have it right there. We can submit it directly to the lender. They'll accept the credit report. And there's 3 scores for those who don't know. There's Experian, TransUnion, and Equifax. We'll take the middle score is what's going to be counted as your credit score. If you have 2 borrowers, they're going to take the lower middle score of the 2. And that'll be factored into making the loan decision, as well as determining what your rate will be.
And Kris, I have a question about the credit score. Whatever the credit companies use, the models are different, aren't they, for different things? So like if I'm on Chase and I'm looking at my checking account or something and I see what Chase says my credit score is that accurate for this, for the same purposes that we're using here?
It wouldn't be, because typically when you see it, it's not a hard pull, it's a soft pull. It's like when you're solicited with credit card offers, like, hey, you've been pre-approved for this. You're pre-approved, but they're still going to run your credit score to see what your actual credit score is. So yeah, those are soft inquiries. And yes, unfortunately, we're going to have to do a hard inquiry, but like I said, we're going to have to do it anyway. And at least we have it there. It's good for 3 months. We can submit it directly to the lender once you have an accepted offer.
Kris, I know you said it's good for 3 months, but just before you're ready to close, you check it again, right?
Yes, the bank will do a credit inquiry just to make sure that you didn't take on any new debt, big debt, things didn't change. And they'll also do a verification of employment as well, just to make sure that you're still working and you didn't just quit your job. I had folks who, a lady who was actually switching to a new job. And I begged her, I'm like, please wait till we close. Right after we close, you can give your notice, you can start your new job. But until then, please don't switch employers.
Right, because just because they got their mortgage commitment doesn't mean that everything's done. right? So you're
Correct.
going to do a verification of employment and the credit check.
Yeah.
Yeah, that's
Nothing
important.
is done until you're at the closing table, signing the paperwork.
You have the keys.
Yep,
Yeah,
that's when we're finally done and we're at the finish line. So, so after you have your pre-approval, you're free to shop. Now, one of the questions I'm asked often is like, how long is a pre-approval good for? Typically, you know, when we print out the pre-approval and we send you the letter, it says it's good for 3 months. But what I would always suggest is right before you make an offer, just check back with me. It takes me, you know, just a few minutes to run the numbers again, just make sure everything is good. Because quite frankly, rates change. You know, whatever rate we did a couple of months ago might be different now. You know, or maybe we did a pre-approval based on a certain figure for taxes, and this new property you're looking to purchase has taxes that might be higher, you know, and you might not qualify for. So it just takes a couple of minutes. Give me a call. I have no problems running the numbers again, making sure everything still works. And when I do pre-approvals as well, I should point out, I don't do just the highest amount that you qualify for. You know, I like to have a conversation with the borrower, find out what's an affordable monthly payment. I could tell you you're pre-approved for $1 million, but if the monthly payments don't work for you, it doesn't make sense. So.
Right, absolutely. A couple of things that you said in terms of the interest rate changes. I think there might be some question about that in the buyer's mind, because they get pre-approved and they think that's the interest rate when it's not set. When does the interest rate get set on their pre-approval?
So the interest rate gets set when the borrower just decides to lock the rate. You can let the rate float, and by float, I mean the rates can go up, they can go down. Interest rates can change even within the day. And once you determine that, you know, this is a rate I can live with, we'll lock that rate. There's also a time set amount of time that you can lock your rate for. So you could do a 15-day lock, a 30-day lock, a 45-day lock. Pricing is going to be different depending how long of a lock you go for. You know, a 60-day lock, the rate is going to be a little higher than if you went with a 15 or a 30-day lock. You know, and honestly, you don't have to lock until the very end, until right before we get a clear to close. So we won't get a clear to close until you lock your rate. But
you run the risk if the rates go up, then you're going to go up.
Yeah, so it all depends. If we're in a fast rising rate environment like we were this past fall, you know, in September, October, November, rates just started shooting up, going up and up and up and up. My recommendation then was always to let's lock quickly, you know, before, you know, you're in the process, rates shoot up and all of a sudden you're no longer eligible because the rate is too high. You know,
the lock expires. So if it gets to the point that it's about to expire, can you just explain what happens then?
Sure. So, you know, your rate, let's say we went with a 30-day lock, and it's determined that we're probably not going to be able to close within those 30 days for whatever reason it is. Maybe your municipal searches on the property aren't back yet or whatnot.
Great example.
Or maybe through no fault of your own. Maybe the seller is just dragging their feet and they're not ready to close. There is a cost to extend a rate lock, and it's usually very expensive to do so. But you also have an option sometimes of what's called a relock. So let's say you have a 30-day lock. Sometimes, believe it or not, it might be cheaper to just relock it for another 30 days. Otherwise, you're going to pay for an extension. And if it's your first extension, that's fine. You have to, unfortunately, extend a second time. It's going to be even more expensive to do so. So it's always a good idea. Let's you know, play it safe and let's get a nice long lock. If you're wanting to lock at submission, you know, typically I would say 45 days.
I think
and that's an important piece about how we work together, because if we lock, if they're locked in, we need to know that,
Yeah.
so we can make sure that the transaction is going to close in a timely fashion, so they don't have to pay to extend the rate lock.
Yes.
So,
I was just gonna say that communication between the lender, the listing agent, the buyer's agent, the attorney, if everybody's on the same page,
Yeah.
a surprise that, uh-oh, we had a closing date and now we can't. Or we have a rate lock expiring on Thursday, you know, it just, communication is so important.
Most
and
definitely.
that's why the team is so important, that works together
Yes.
like we do, because that can help make it smoother for our clients. And one thing that we talked about is that all pre-approvals aren't the same.
Mhm.
And, you know, we want to be sure when we're working with buyers or we're representing a seller, that the borrower and the buyer of the home has a good pre-approval, that all of this has been done, because it makes it more attractive when you're out shopping for a home. And I know we're going to have a question in a second from a viewer that kind of ties into this. So it's a perfect question to ask, is that the lender matters. And
Mhm.
when we see a pre-approval come from Kris, we know, and we can tell our seller clients that this is the normal process, and we have a lot of confidence in that pre-approval.
I just had this situation literally just happened to me. I got connected with a buyer and she told me she was already pre-approved. That's great. We can start looking at homes. Send me the pre-approval letter. I didn't recognize the name of the lender. There was typos on the letter. It just didn't sit right. The whole thing was crazy, but you know, the budget was 300,000 because the lender said she could afford it. So we got talking through the process and there seemed to be some credit issues. So I asked Kris to actually take a second look at it. He did. And Kris, do you want to share what happened?
Sure. So unfortunately, that borrower did not qualify for 300,000, or unfortunately, she didn't qualify for enough to purchase a home. And like I said, no, some pre-approvals, not all pre-approvals are the same. You know, not everybody's going to do a thorough job. But for me, it's important because, you know, if A, I have a reputation to uphold. Second, you know, we want the deal to close. You know, we don't want to put false hope into, give a borrower false hope. You know, I've had deals.
It was false hope, and now she can't afford a home. She was a first-time home buyer, and now she has to see if she can extend her rental, which, you know, it's upsetting.
Yep.
Yeah, and buyers shouldn't shop around for the answer that they want from a lender. They should
True.
shop for the truth.
Exactly.
And sometimes, you know, they might get told these are the numbers, or now's not the time. Maybe their credit score isn't great and they could do some things to improve their credit before they purchase. And then they just keep shopping until they find somebody to tell them what they want to hear.
Yeah.
And that's, you know, that is awful for the buyer for the very reasons that, you know, Martha just said, because then they're really heartbroken over it and, you know, can't purchase at this time. So thank you so much, Kris. We do have a question from a viewer that I'm gonna, you know, kick over to Martha. The question that I had was, hold on one second. Here it is. How do I make my offer more attractive in this market? I heard the market's still hot. What can I do?
So I think that's a loaded question, but if
A lot in there.
if we've learned anything from tonight, I think it's to get a proper, thorough pre-approval. Step one is the pre-approval, because then at least we know what our budget is, what you're comfortable spending, and we can narrow down our search from there. Once we find the property and want to put an offer in, I always tell my buyers, it's not always about the offer price. It's a combination of things, your terms, your deposit, always recommend a home inspection. And then things that you can kind of tweak your offer. You can ask the listing agent, do they have to sell by a certain time? Do they want to close when school is out? If your buyer is flexible and somebody else isn't, you may be picked just based on the fact that you're willing to work with them. You're a team player. Once you submit your offer, I will say we are seeing multiple offers still. So just be patient, because if they receive 10 plus offers on a property and you want an answer that day or the next day, it may not happen. All these offers have to be thoroughly reviewed. So give the listing agent and the seller some time. It doesn't mean they're ignoring you. It just means they're doing their job. And I can't say it enough. Definitely, if you can, use a local lender like Kris Diaz. For me, myself, as a buyer's agent, when I see pre-approvals from Kris, I know we're good. I don't have to worry about submitting an offer. And on the listing side, if I see a Hudson United pre-approval come in to local lender, I know I can pick up the phone, call Kris. We've had conversations on Sundays about numbers, and it just makes it that more seamless.
Right, and a local attorney.
Yes, a local attorney. If you're coming from out of state, and please don't use your cousin's brother. It never works.
Yeah.
No.
And those are some of the things, some of the nuances to make your offer more attractive when price isn't the only consideration. Because what the listing agents and the sellers want are a deal that's going to close and that's going to be meet their clients' needs as well. So I want to thank again Kris for being with us, and I want to share Kris's contact information. Everybody, please jot this number down. If you have any questions or you want to connect with Kris, you can also put them in the comment section here on Facebook and connect with him, and he'll answer your questions. Kris, one quick thing before we go. You have a second look program.
Yes.
And could you just tell everybody what that is?
Sure. So Hudson United Mortgage has a second look program where if you've gotten a pre-approval from anybody else, you bring that pre-approval over to us. We'll do our own pre-approval, and we'll give you $100 just to give that pre-approval a second look, and just to verify all the information there is accurate.
So that I was talking about that didn't qualify still got that gift card, right, Kris?
Yes, most definitely. Yep.
Okay.
We give the $100 no matter what. And quite honestly, you know, if you have a better deal or a better pre-approval or a better offer, you still get the $100, and I have no problem letting you know that you have a great deal there and that you should continue with that lender.
Right. But I will say this, you have to be sure that the pre-approval that you got, which was done, whatever, a month ago or whatever the date was, that whatever the interest rate was that day, they're not giving you that either any longer. Yeah. So sometimes people are comparing and they think, well, I have this percent with them. No, that was the rate at that time. Your rate now, you've got to call that bank and find out what the rate is today. So they're using one snapshot in time, comparing it to another. So never do it that way. Always make sure to touch base on the same day to find out what the rates are.
And you have to be careful as well. So sometimes they might not tell you, but there is an origination charge where maybe they're tacking on, maybe there's a cost to get that rate that they maybe haven't disclosed to you or haven't told you about. So, you know, that's why we do the second look.
Yeah, it's a great program. So thank you so much.
No,
I just want to wrap up. Oh, thank you. We'll definitely have you back again. So if you want to get in contact with either Martha or myself, our contact information is on the screen, or you can scan the QR codes. You can reach us on our different phone numbers here. Martha's 914-562-1778. And I'm 845-629-3504. We look forward to connecting with you, seeing you next month for our webinar on staging. And we look forward to seeing you then. If you have any questions, you can email us and we'll ask your question online at the next webinar. So we look forward to seeing you then. Have a great night, everybody.
Thank you. Good night.